Florida Talk Real Estate is not only a .com, your one-stop real estate shop, but you can find us, Florida Talk Real Estate, on Facebook, live streaming on a Saturday, and of course on YouTube as well, Florida Talk Real Estate LLC. That is home of a ton of informational chunk videos. That's Florida Talk Real Estate now on YouTube. Great to have you with us, and you are welcome to be a part of the show with your questions, comments, concerns in the world of real estate. Don't be shy. Hit us up, 877-927-6969. Our producer extraordinaire, Jimothy, will line you up there. You make that call, we'll take that call. Good morning to you, Jimothy. How are you, my friend?
I am mighty fine, Johnny. Good to see you guys, Jim and Ross. Always a pleasure to be with you here on a Saturday.
And you're like, see you guys. Yes, we are back in the Real Radio studio after quite a hiatus. Good to be back in the studio. Feels official, like we're back on the radio. I'm your boy, Johnny C., air traffic control. Jimothy already say good morning. And I'll say good morning to Ross Komarinetz. That's the dude, the man, the guy, the legend, really, from Brightway Insurance, Juno Beach. Ross, how are you, my friend?
I'm good. It's so good to be back in studio. Last week, I was a little, I don't know. I had a little butterflies in my stomach being in here, but I don't know. Today feels like normal.
Like the way it should, right? Yeah. I totally appreciate that. I had the same feeling. I've spent like 18 years in these holes, Ross. 6 days a week. And I still, a couple weeks ago, I had a little like, woo. It was crazy. Hard to explain, but I'm glad you experienced it.
Yeah.
Nobody would believe me.
Yeah, but it feels good.
It does. Yeah. Great to have you back in studio with us as well. And always nice to say good morning to our fearless leader. Told you for 11 plus years now, he runs a top producing Keller Williams team. At Keller Williams Innovations, you'll find the Florida Home Pros team. Wow. Boy, what am I thinking about this morning?
First time?
First time. Yeah.
Okay.
I have an idea.
What's going on in my pants? Florida Home Pros team is Jim DePola. How you doing, Jim? Bail me out.
Hey, good, Johnny. If everything goes well, I set the cameras up better today. So Jimothy hopefully won't be saying, put your face in front of the mic. So we're back in studio. It's so great. I was just about to say it was so nice for a second there. It was so nice to watch Johnny actually staring through the window, looking at Jimothy, 10 feet away from each other. It's awesome to be back in studio. We're trying to mess around with the cameras a little bit more each week for the Facebook and YouTube people or the rerun people. So the quality of the stuff's going to get a little better. Johnny, the light I brought in today was a temporary light and doesn't look very good, but you'll get through it. You're a pro.
Yeah, I can't see it. I don't care.
Yeah, you don't care, right? Yeah, exactly.
I need a welder's mask, but that's okay.
I know, right? Exactly, right? We'll fix that next week. I just got a new light yesterday, but I didn't know how to set it up. So we got a lot to talk about today, a lot of fun stuff. One of the things we're going to do is last week we got a lot of really good feedback, Ross, about are talking about the roof with Mike and Mike's mom, and then just roofs in general and all that. People really like that information. I think I had a bunch of comments this week about it. So if anybody has any questions about older roofs and how to handle roofs and anything you want to know about roofs and insurance, it's really important that you know that stuff, because if you're buying, the roof becomes a huge issue when you're trying to buy a house, Ross. I mean, you deal with that all the time, right?
Yeah.
Yep. And then when you're a seller, you have to worry about the age of the roof, because your buyer is going to have to be concerned about it. And then also, if you're not buying or selling, you just have to be concerned about it because the insurance company's on your butt. And we're going to talk about more insurance stuff today. Johnny, we have a lot of first-time home buyers right now, and they're on very, very tight budgets.
I bet.
Under $300,000, right? And a
So
lot
tight
of them,
budget and in a really, really popular price point too.
yes. So
like
that price
people
point,
they're buying at that price point.
that price point's on fire.
Yeah.
Right. So still, right. So what we're going to talk about today is when you're trying to buy a house, one of the things that people always say is, I want a single family home and I want it under 300,000 in Palm Beach County. Right.
I'll take two of those.
Yeah, I know. Exactly. Right.
Yes.
Yes.
Any color. Don't
Baller.
Yes, exactly. Right. So we're going to talk about how and the reason why they always say this, I don't want an HOA. Right. That's why they don't think about condos or townhomes. Don't want the HOA
and a pool and city water.
No,
and...
I'm not going down that path, but I understand where you're coming on that path. What I'm talking more about is that the reason people immediately decide, I don't want to be in an HOA or I don't want to be in a condo necessarily, but they're at a price point where that might be the best situation for them. And the biggest complaint that they have is, I don't want to pay $300, $400 a month for the condo or their HOA fee. However, that condo HOA fee, if you look at it at the bigger picture, actually has some hidden benefits to it that actually is cost savings to you in a way, or at least a cost pass on, savings pass on. And we're going to get into that a little bit today.
Cool.
Also, we're going to talk about another one bites the dust. Another insurance company went under. We kind of knew this back last summer. It's not a surprise, but it went under completely. At first, they just weren't going to take any new customers. Now they're gone. Kaput. See you later.
Well, that's the first sign typically, right?
Yeah,
We'll get into that.
yeah.
But when they're like, oh, we can't take any more on, you're like, oh, no.
Yeah.
Yeah.
Well, there's a lot of companies that aren't taking policies right now. It's
Yeah,
pretty
exactly.
crazy.
Yeah, it's more like easier to count the ones that are, right?
Yeah.
So we're also going to talk about the economy and mortgage rates, right? We're in a pretty topsy-turvy market right now. The interest rates did not hold tight this week for the first time. It really went up significantly. When I say significantly, not the end of the world, but significantly, consider we're already at these high interest rates anyway.
Mhm.
So we're going to talk about that. Let me see. Oh, we're also going to talk about just a couple more things. Let me see. We're going to talk about a lot of people, I'm finding out, are actually leaving here to move to other parts of the state or country because they want to buy a new home, but they feel it's not affordable to buy a home here. And these are people, some people even own a home now, but they want to buy they want to upscale to a bigger home for their lifestyle, and they're feeling they can't afford it even in this area. So they're moving out of the area, out of state. So I figured, since I'm meeting so many people like that, I figured I read an article where it found the 10 cheapest places for down payment and purchase price in the country to buy a single family home. So we're going to go over those 10 cities real quick, right? That'll be kind of fun to look at.
And this is like we're going 20% down. This is the
not 20% down. So what's going to happen in this report is they averaged out what the average person put down in that area.
Okay.
So some are doing 3%, some are doing 0% for VA, some are doing 20% conventional, and they figure all of it together, and then they figure out what the average down payment is for a house in that area. So that's how they're going to do it.
There's a lot of veterans around. That's going to be a pretty small number.
Exactly. And then this is something people talk about all the time. It's like, my house needs major upgrading and I'm going to sell it right now. What should I do?
All the deferred maintenance I've carried.
Everything that you have never done and
Right.
you should have done over all these years. And now you're going to do it and get no enjoyment, what I call personal use and enjoyment of the repair.
Right.
And you're hoping that's going to give you more value than the money and the time and the effort to build or renovate what you're trying to do. We're going to take a look at some statistics from a recent report to see, do you get your money back on that repair or not? And I'm going to give you some top advice from the top listing agent in the area, me.
I was going to say, you're getting some numbers, but you're really good at determining what an ROI is going to be on an investment in the sale, right?
Yeah, like a
really
upgrade or repair.
To do it or not to do it.
Do it or not to. I should have used that as a headline. I should have talked to you before this. That's a better headline. To do it or not to do it. That's the question. So we're going to talk about that. I feel like that's really good value to people that are thinking about selling, or they have a lot of deferred maintenance and they don't want to sell now. It's like, oh my gosh, maybe I should start doing stuff now for later. Okay, and we're going to start off where we left off last week. So that's how we're going to start off. Okay,
well, you got to remind us for sure.
Yeah. So how we left off last week was, where the heck are all the people coming from to Florida? Remember, we started talking about the transitory market. Everybody talks about how the New Yorkers, and I'm just using that as a big thing. Everybody says everybody's moving from New York and it's like majorly impacting the area. It's such a common refrain that I'm not even sure it's 100% true. So we're going to go over some stats where everybody's coming from, not just Palm Beach County, but also the state of Florida. And then you can decide if that amount of people really is going to impact the area as much as everybody thinks the impact is. Okay.
Yeah. And I remember one of your teases, because we kind of started diving in with some guesses, and you were teasing it was more foreign driven.
Yeah, I think that was the answer. It was international.
Foreign driven.
International is the biggest move to Florida by far. Okay, by far.
But I'm sure they break it down to even like specific countries, which is probably where
They-
you're going, huh?
They do. No, I'm not going to do specific countries because, frankly, I was so busy this week and I didn't have time to. I didn't have time to go through more than what the article I read last week. And last week they only broke it down by foreign buyers. That means any country in the world, and then all broken down by all the different states. Okay. But I do know from past articles that in foreign buyers, the number one group usually is usually either China or a country in South America.
Yeah,
I
Central
would
and
have guessed
South America.
Canada.
Yeah. Canada's like in the top 5 for sure, but it fluctuates very rapidly, high or low. And
Yeah,
Canada's gone
takeoff
through a
lows
lot
there.
of real estate stuff. They've been going through their own little up and down in their real estate market too. It's not exactly mirroring what happened with us. It's just different. And Canada now doesn't their inventory is so tight that they just passed a regulation that if you're a foreign buyer, you can't buy in Canada.
Sorry. Yep.
Oh,
Right?
wow.
Yeah. You're like, see you later
Saw
for
that,
right
yeah.
now. Right. Because they're trying to help. And,
And that
there's-
will help. That'll, that keeps any foreign dollars out of there investing. Like, look, that just is, if it's going to be sold, it's going to be sold to a Canadian.
if it happened here, right, and we lost all those foreign buyers, it would open up a huge amount of inventory for us down here. And
Sure
I'm not
would.
saying that you should do that, but there are areas of the country that are talking about, right now, they're talking about China because the balloon thing.
Well, you want to.
They're talking about that because China's trying to buy all this farmland right now.
Well, it's the epitome of America first, right? That's the epitome of it. Like
Mhm.
that in goods. Be like, well, if you're gonna sell your goods that aren't made here,
Yep.
you're gonna pay through your teeth. And if you want to buy something here, not gonna happen. Like that's the epitome of
Exactly.
it. We'll never come close to that.
Exactly. So it's kind of interesting. Let me just get to this article. Hold on here 1 second.
And this is about people migrating to Florida.
Yeah.
So
Okay.
and you did mention New York always seems to be the driving force, because I think a lot of people that have been down here long enough, we realize we're like the sixth borough. Like it's a real thing, especially Palm Beach
Mhm.
County in South.
Mhm.
But I know Texas was driving a lot of the states interstate moving numbers in the last couple of years. Believe it or not, people moving from Texas to Florida.
Yeah, it's up there.
Yeah.
Okay, it's up there when we take a look at all this. So it's kind of interesting. So let's go ahead and take a look. Oh, let's see if Texas is in. Yeah, Texas is even in Palm Beach County. Okay, so let me just give you a kind of rundown, and then we're going to talk about whether this is like a real big impact in our area or not. Like, are all the New Yorkers taking up the homes that Floridians are going to buy, or are they bringing up the prices super, super high? Things like that, because we've heard that now for how long?
Oh, forever.
Yeah, exactly. So, Florida is ranked out of all the states in the country. Florida is ranked number 1 for population growth. That's very common. Back in the day, we lost a lot after the last financial crisis from 05 to 012. We didn't hold that title that whole time. A lot of people fled. But now we're number 1 again for people, net gains population for each state. But it's only 1.9%. I thought it would be higher than that, but that's still a lot of people.
Well,
right?
especially because we've been number 1 for a number of years running.
Mhm.
I wouldn't be able to tell you how many, but a number of years running now, which is why we moved into the population positioning we've been in. What are
Mhm.
we, third in population now? Second?
I think we're third.
Third?
I think it's New York, California, and us. I think is the way
I
it
think you got them
goes.
backwards.
Oh, you think it's
California,
California, New York,
yeah.
and us? Yeah. So we're we're in the top 3 for sure. Not number 1, but second or third. So last year we had a 1.9% increase in population. This is all coming from a report from the Palm Beach Post. And there were about 583,000 people who got driver's licenses in Florida and gave up a license from another state. That's how they're determining these numbers, is from driver's licenses. Okay.
Yep.
Okay. So getting into that, let's see. We had a 20% increase in 2022 of people turning in their driver's license from other states and getting new ones. We had a 28% increase in that. That's about 36,000 more than the year before. Okay. So we were still doing pretty good last year too, like you said. Okay. In 2022, the top 10 places in 2022 where somebody moved from Florida and dumped their driver's license from somewhere else. Foreign countries accounted for 115,000 of that 583,000 people that came. Okay. Now you have to remember now. Okay, I'll get into that later. Then number two, after 115,000, number two is New York with 61,000 people, right? Then New Jersey, not surprising, 30,000. California, 28,000. People don't think it, like you were mentioning, Texas. That's another kind of strange move in a way, except for the taxes over in California.
California is an easy one. I moved here from California. You know why? I was never going to own a home in California. But the hell, I moved here and thought I was never going to own a home. So, Florida Talk Real Estate. That's .com. Your one-stop real estate shop.
I know, right? It's so,
Ding,
it's so
and a
crazy.
little bell. Ding.
So after California, it was Pennsylvania with 24,000. Illinois was also 24,000.
Texas way down the list. I thought it was way higher.
Yeah, Georgia was 23,000. So those three states are all clustered together pretty close. Then Texas was 20,000. So we hit the Texas. Ohio, people forget, but a lot of people come from Ohio, 18,000.
Especially over on the West Coast.
I was going to say that's a West Coast
Yes,
move.
exactly.
They
That's
take
where
75 down.
Yeah,
they go.
exactly.
Yep.
And then Massachusetts, 17,000. Now, Palm Beach County. Okay. Now this is where I think when people I feel like are exaggerating about how much impact the foreign market is. Okay. So in Palm Beach County, the number one, let me see. Now this is interesting. In Palm Beach County, the number one group is New York with 8,000 people, right? But number two is the foreign country, right? Which is only was 7,100 people, right? So what I found interesting about that, collectively in this state, the foreign buyers dwarf the next demographic below it. But in Palm Beach County, we have more New Yorkers moving here than foreign investors or foreign people that are moving. They don't have to be investors,
So
but
you're
foreign people
saying if you
moving
live
there.
in Palm Beach County, it's true. It's
Well,
true.
well, my question is this. So there's 8,000 New Yorkers, okay? We're in a population of 1.4, almost 1.5 million people in Palm Beach County, right? So you have 8,000 people moving from New York down here last year, right? Now, we don't even know how many of those 8,000 people are the same family.
Right. Well, but remember, they have to have a driver's license. So if there's a brood of them coming down and only two of them drive, we're only counting two of them.
Well, that's true.
And
Okay,
they're all
so
New
kind of
Yorkers.
even if I was thinking the other way, that it could be like a husband, a wife, and two kids, and they all teenagers, and they all get licenses, and all of a sudden it's four people.
So many young people don't want to drive anymore.
Oh, tell me about it. I know. I read an
many
article about that.
young people don't want to drive, so they're not going to be counted.
I can't even
Still New
imagine that.
Yorkers.
When I was a kid, forget about it. I took my day off when I turned 15 to get my learner's permit and everything. I took the day off from school.
We couldn't
Yeah.
wait.
Yeah.
A moped license
I
when
was
I
there
was
that day,
16.
16th birthday.
I had to put a buddy on legit suicide watch because he failed his driver's license. We were double dating. We were going to Marriott's Great America. Like, it was happening. And he failed. And I was like, I'm legit concerned for this dude. He's got a great life. And I think he might end it. It was the biggest deal of his life.
Oh my God.
And he just had to wait another week.
Yeah, exactly.
Yeah.
Right. Oh my God.
My daughter's 34. She still doesn't have a license.
For real?
Yeah.
She
She lives,
just
she
doesn't
lives
like
in
it?
a small town in Pennsylvania. She can walk everywhere. She doesn't need it.
Well, walking everywhere is pretty damn cool.
Or
Yeah.
Uber if she
Yeah.
has to. I mean,
Yeah.
if you got
Husband drives.
Yeah, or
husband
that
drives,
too.
You know,
Yeah.
they got to go to Wally
Oh,
World.
so
or
she has
wherever,
a full-time chauffeur. You didn't tell us
Yeah,
that.
she can. Yeah, that's
To
means,
live in.
but walks to the grocery store. Walks the kids to school. I mean, small town USA.
That sounds good. I want to move to that town. Maybe it's one of the towns on this list.
You know who doesn't move there? New Yorkers.
Yeah,
Bingo.
exactly. Yeah. So there's 8,000 people in New York that came to Palm Beach County last year, right? We had 7,000 foreigners, almost 4,000 from New Jersey, almost 2,000 from California, 1,600 from Pennsylvania, 1,600.
Can I interrupt for just a second?
Mhm.
I almost feel like, because I'm listening to the conversation, I almost feel like if I was a New Yorker, I might be like, hey, like it feels a little tacky. No. Some of my favorite people are New Yorkers. Just
I'm
so you
from
know.
New York.
Yeah. Half of us sitting
I'm
here.
one of these people.
Half of us sitting in this room. Or Timothy's a New Yorker?
Jersey.
Jersey. Sorry, you lumped in. Right? Yeah. And so half of us. Some of my favorite people are New Yorkers. My family's from the Northeast. This is not a tacky. We're just talking facts.
Yeah, we're just talking about like, you don't come from here kind of attitude. And is it legit or not? Is it legit that
I'm not
people are
from
like that?
Right.
So if you add all these numbers up, it's, let's see, 15, 19, 21, 23, 24, 25, 26, 27, 28, about 30,000 people moved here out of 1.5 million or 1.45 million people in the whole county. So if you were to take a percentage of that, right, it's like a tiny fraction of a percent, right? So how much does it impact? So I was thinking about that as a realtor, like as far as housing prices and everything. 15,000 homes, assuming that they're all coming down here to either rent or buy, right? When they're coming down, they got to live somewhere. That is a chunk of the real estate market as far as what's on the MLS. It's a significant chunk. Okay. But I also think that with the New Yorkers, I think that it impacted different markets differently. I don't think that the market under 500,000 was affected that much by people, quote, from New York moving down here or out of state. When I say New York, I mean out of state, right? I don't really feel that there was that much. I think that the trends I saw over the last couple of years is the New Yorkers after COVID got tired. The people in other states, especially New York, they got tired of the politics. They got tired of being shut in. They wanted to go to what they considered an open, free state. They loved the idea. Then they woke up to, hey, I can't believe Florida doesn't have any state income tax. That's amazing. Hey, did you hear about Florida's homestead laws? They're the strongest in the nation. So you start adding all that up together. Hey, do you know Florida's the sunshine state?
Yeah. Well, they're moving from a give state, like a state that gives to the collective need of a nation, to a state that puts their hand out going, take from the collective. The part where we are, this state is one of the lead takers. We take from the federal tills.
We definitely do.
We're not a contributor to the federal tills.
No. So just like a lot of the states that complain about certain things, they're the ones that use the most of those benefits. Exactly. They're the ones that need most of the benefits.
Comical.
So the thing is that it's interesting to find out where everybody's coming from. I don't think this trend is going to slow down much, although we have seen a lot of people from the Northeast really slow down on their buying recently. I think it's because of the stock market changes and other investments. Crypto, I think, really made a big difference between a dip in stock, dip in crypto. They didn't feel as, hey, I got all the money in the world and I can go do what I want. Now they're kind of like, maybe I should be a little more conservative right now and see how everything changes.
I know a lot of people that did, especially in the pandemic, did really well in a quick little burst in crypto. And they were like, wow, this is awesome. And then that all went, and then a bunch more went.
Yeah.
And that can be crippling, especially if you're diving in pretty deep. And I see Ross just shaking his head.
I don't understand it.
Yeah, I didn't either. But God bless those that managed to, make a lot of money. But I'm with you, Jim. I think a lot of people had a good amount of money go away in investments, and they at least pump their brakes a little bit when it comes to bigger investments.
So they're still coming down. They're just not coming down with the froth and the frenzy that they were doing a couple 6 months ago.
Real estate's a huge investment, right? I mean, it is. So when you're losing in other investment opportunities, you have to pump the brakes somewhere, and might be real estate.
And I really feel like one of the trends that did affect us very greatly, especially New York, Connecticut. I'm surprised Connecticut wasn't in that group. It's such a small state. Maybe that's part of the reason why. But the wealthier areas of the Northeast, when they were selling their houses up there, their brownstones or whatever, they were getting $2-3 million for a property they probably paid $5 million for, 20 years ago or something, or 15 years ago.
So they were losing that much money?
No, they were buying it for $500,000 and selling it for $2 to $3 million, right? So they had all this money. Then they come down here and it's like, oh my God, now when I move to Florida, I'm going to have to pay $2 to $3 million for my house. That's what they're thinking, because that's what's selling up there. And then when they see what they can get down here for, this is back about a year and a half ago, 2 years ago, but what they could see what they can get under $1 million, that to them was like crazy town. Are you telling me I could live in paradise and I can get this house for $1 million? Well, down here, based on our income, Floridian income or Palm Beach County income or South Florida income, $1 million is really up there at the price point for most people. But for them, with the amount of equity that they had, they can come down here and buy something cash. So they were just like, I don't care if I pay $100,000, $200,000 more than, in order to beat out the competition. This is so cheap compared to what I'm got up there, why not do it?
Sure.
And that was really hurting our local residents when they were trying to buy. If you're a person that just moved down here from Florida, or you want to have a story about moving to Florida, please give us a call here live on the air. We'd love to talk to you. 877-927-6969. And if you're a person that feels like you're being screwed over by all the people that are moving out here and you can't get what you want, we'd love to talk to you on air and talk about that. So give us a call live right now on the air, 877-927-6969. Love to talk to you about that.
Yeah, you make that call, we'll take that call. We won't keep you waiting either. Jimothy will line you up. We'll get you right on the air. Of course, if you're not comfortable on the radio, but you are looking for pros, we got a team of experts for you at FloridaTalkRealEstate.com. We call it your one-stop real estate shop for a reason, because you do have access to the entire team. These are people that are really good at what they do and beautifully work cohesively together. Whether you're looking to buy a home, sell a home, stuck with a home, you don't know what to do, maybe you are battling through your property insurance needs right now, you are not alone. And you should have somebody like Ross Komarinetz in the corner fighting for you. And man, he's always bloodied up from all the fighting he's doing for folks. FloridaTalkRealEstate.com.
Yeah, and we're on the next segment, we're going to go over something real quick right now. But on the next second, we're going to start right away talking about understanding property insurance or homeowners insurance for townhomes, condos, single family home, and understanding what you're paying for, so you can compare apples to apples when you're trying to make a decision where you want to live. And I think it's like a very interesting subject, and we'll talk about it. People haven't really talked about it much. I haven't heard anybody think about it this way or explain it this way. I think it'd be really great because Ross here to guide us through everything.
Awesome.
But let's just wrap up this segment with another insurance company bites the dust. Let's just get through that one right away, right? So we can get off with the bad news and then get into the informative news on the flip side, right? So United Property and Casualty is the company that just went under. They had already made an announcement last summer. Everybody knew they were in trouble, and they made an announcement last summer that they weren't taking any new business. And all these government agencies, including the state of Florida, were overseeing them to make sure that they were going to make it through what they needed to make it through with the customers they have. Ian was the final straw for them. They had almost 25,000 claims. It crushed them. So now they can't even handle the claims they have. There was a company, Ross, called Slide, which I never heard of before. They picked up a whole chunk of the United Property and Casualty insurance group. So they took over a bunch of the companies. And this was the 7th company we lost, Ross.
No, we had 7 go. Yeah, I guess it was probably counted last year.
Yeah, I think it might have, because they pulled out. So we haven't seen like losing 7 in like 1 year in a very long time, right?
Ever.
Right? You've never seen it.
It's rare for even one.
Wow.
You know?
So 7 is like really crazy town.
Yeah.
Wow. Okay. And United Property and Casualty, what did you know about that company? I'm sure you worked with them in the past.
Yeah,
because they were a pretty big company, right?
Yeah,
down here.
They were, competitive. At one time, my dad's house was insured with them. But yeah, they were a good company. They were competitive. They had good coverages you could add. Yeah, we really liked them.
You got to tell me, 25,000 claims doesn't feel like a big hit to me. Is that a substantial amount of claims to deal with at one time? Because I know the dollars are all going to vary, but that doesn't feel like that was a huge avalanche of claims to me.
I without like knowing exactly what the other carriers' claims experiences were, but I'm sure they just ran out of cash from dealing with the law, what's been plaguing us for the last few years. Yeah. I'm sure they just ran out of the cash to.
Well, and it was I guess 25,000 was the magic number for them to.
Yeah, and I mean they had already decided like, hey, we can't sustain this, so we're pulling out. And it wasn't like they were immediately going out of business like we saw last year with most carriers, where hey, in 30 days these policies are done.
Right.
There was more of kind of hey, for legality reasons, how much you have to notify a homeowner when you're going to drop their insurance. They were extending some of they were non-renewing a lot of people in the certain time frame. But they were extending coverage for people who they couldn't get that legal notice out in time. So they were extending that to a certain date. So it wasn't as catastrophic as what we saw last year with most companies. This was kind of a lead up that we knew was coming. And so, we had been proactively either rewriting some of those policies anyway, or, notifying our customers, hey, this is going to happen. Here's a replacement quote. But like Jim said, there's a company called Slide that they actually took over the book of business for St. John's, who went out of business last year. So kind of instead of that, crazy scenario of, oh my gosh, these policies are all going to cancel in 30 days because this company is going out of business, Slide came in and took over all those policies to prevent that. And so they're kind of doing the same thing with the UPC policies. It's a little bit more confusing. They're taking some that were extended, some that weren't. Maybe it made a but we're trying to figure that out. But they are assuming a good portion of them. And the ones that they're not assuming, they are kind of expediting the underwriting process, but you do have to rewrite the policy with them, subject to their new premium. But so it's often a little bit more expensive, but it does expedite the underwriting. You don't have to provide inspections. You don't have to provide just some of the other things that you would if you're going to a new carrier.
This Slide company, has it been around a long time? I just get a little nervous about a new company coming in when everybody's leaving.
No, they haven't.
But you have to have it. So,
but when a new company comes in and they start writing new business, they assumed one carrier's book, and I guess two if you count UPC. But when they're coming in pretty fresh, they're not going to be bogged down by the lawsuits that are lingering from years ago. They don't have that baggage that coming in with, and now subject to the new laws that went in effect in December from the special legislation.
Right.
Now they're even more protected from those lawsuits that had really plagued the industry and bogged down the companies.
Right.
You know what I find really interesting though? And who's the agency or who's the governing kind of decider when it comes to the solvency of these insurance companies? Like, because there's magic numbers, right? They have to have so much money in the
Florida
coffers.
Department of Insurance.
Is that who it is?
Yeah.
So it's individual state to state, right? It's not a federal governing. It's individual state to state. So Florida has its own regulations, and we've talked about them. Our legislators are trying to work on certain things to help us, the consumers. We'll see if it comes together in the next couple of years. So there's some magic numbers, and I know you probably don't know this, Ross, but I find this very fascinating. So all the companies that go insolvent and close, is insolvent the right word, by the way? Am I using that right?
For most carriers, yeah.
Most carriers. They don't have enough money to cover a catastrophic claims. If something bad happens, everything they're carrying, they don't have enough to cover it, so they're not in a position to operate, right? Kind of basic terms. What I find interesting is all of them that go under, the policies that are currently existing and then the new policies are vastly different. No wonder these companies are having a hard time with their dollars, because the policies they're writing or holding are clearly off by $1,000 at least on an annual basis. Why not up their holding, right? Say, look, well, we'll keep you insured, but it's going to cost you $1,400 more, just like it's going to cost you to switch to probably Citizens, right? Or what's this? Slide. I'm sorry.
Swank.
Swank.
I'll tell you what that is later.
Blast from the past.
Yeah.
Thanks, Cherry. Help me on that, Ross. It just makes sense, doesn't it?
Yeah, and sometimes even on the UPC policies that we're rewriting, sometimes we're finding something less, but it's Citizens, so it's less expensive. But when all these carriers were going out of business and we were sending new quotes that were substantially higher, people were upset, like, I was only paying this, and well, those rates may have been artificially low,
right?
That's why they're going out of business,
right? And
that's what you're seeing is, people are complaining about the rates being so high, but that's what's happening is the carriers that are still offering coverage and renewing their current customers, they're going to have to charge for it to stay in business.
I don't know if everybody had the luxury. I had the luxury of you telling me, like, hey, there's a reason this policy is that low, and you are rolling the dice. Like, look me in my eyes, and you're like, you are rolling the dice. And I was like, don't crap out.
Vegas, baby.
7-Eleven, baby.
Yeah. And
7-Eleven.
I rolled some hot dice for a couple of years, and then they went under, right?
Yeah, they were the one of the
Shockingly,
ones.
right?
Yeah.
And thankfully, I didn't have to go through the misery of a claim and what could have led up to that, possibly. Thankfully, I didn't. And I'm glad nobody had to in those times. But the reality is you kind of saw that coming. Like you're gonna have a massive fight if you have a claim, and they're probably not gonna be around too much longer. How do we not see this all coming as an industry? Like, how do we get to where we're at? Is it just lack of regulation? Is that kind of
No, I don't think it's regular. I mean, it legitimately is fraud, the roof claims.
Yeah.
I mean, that is what happened. So,
these companies that were keeping super low premiums, right? They just weren't getting sued at the rates that some of the other companies were.
I don't know if maybe they didn't, think it would be something that would go on as long as it has. But as an insurance company, you buy reinsurance for catastrophic events like hurricanes. So you're kind of insured for that. But when you have to pay out like a settlement to have a property repaired, where only 8% of that money is going to repair the property, and it's all going in everything else above that.
8%.
8% is going to repair the property, and all the other money that's being paid out is just going to attorneys.
I don't know if I was a lawyer. That sounds pretty good to me.
Yeah. Exactly.
What are you saying, Ross?
Those billboards on 95, those things aren't cheap.
How
man.
can I make it 95% instead of 93%?
I've heard the ads. I want to sue your homeowner's insurance.
Yeah.
It's exactly the words that come out of their mouth.
Fishing, baby.
Mhm.
Exactly.
Yeah.
So they're just running out of all of those reserves that they've been accumulating, and unfortunately we saw 7 of them go out of business, and thankfully we're doing away with those one-way attorney's fees, so you can't just throw it at the wall to see if it sticks.
So in a way, a little bit of regulation is going to kind of cut that off.
Yes. Well, yeah, hopefully.
Yeah,
hopefully.
and that's what Ross had said. Just to wrap it up, so we can take a break. That's what Ross said a couple weeks ago, which is basically it's going to take a year or two before we even figure out if what they did is going to work and what kind of impact it has. And I don't really think it's going to. I think it's going to have a positive impact, but I don't know if it's going to be the be all end all. I think we're going to be tweaking that stuff over through legislation. We're going to be tweaking that stuff for quite a while.
Yeah, to show you how your weeks and months blend. Ross was saying that months ago.
Yeah, exactly. So let's go ahead and take a break. On the flip side, we're going to talk about understanding property insurance. And when you have a single family home, townhome, and condo is going to be included in here. We're going to talk a little bit about that. And also understanding when you're buying a house or buying a new property, when you block out condos and HOAs right away, if you're on a tight budget, you might be making a mistake by blocking out townhomes and condos in your search.
Oh, good. I love it when we break down the dollars and cents. There's dollars involved, and does it make sense for you? You got to have a team of pros when you're working through big purchases in your life, like selling, buying a home, or dealing with a home, whether you're really massively dealing with it, or you're like all of a sudden just dealing. Hey, I got to notice my insurance is dropping me. That's good. You're scrambling right now. Go to FloridaTalkRealEstate.com. Everything in between. We have pros at the One Stop Real Estate Shop. That's FloridaTalkRealEstate.com. Give them a call, 888-973-7828. Reach out on Facebook. Just find a way. I think smoke signals still might work too, if we're really tuned in.
We've been using carrier pigeons lately.
Oh, okay, good. Awesome. So as I say, there's lots of ways to get in charge. I would go to FloridaTalkRealEstate.com. That's just me, but I hate pigeons. It's Florida Talk Real Estate on Real Radio.
The bad news, the brain isn't all that great at hearing stuff and remembering it. The good news, you can watch us too. Like and follow us on Facebook, Instagram, and Twitter at Real Radio 92.1.
For more information about contests on the station, visit realradio921.com/rules.
From the Gordon and Partners Weather Center. Have you or a loved one been injured through no fault of your own? Call 561-333-3333 or go to fortheinjured.com.
I'm CBS 12 meteorologist Jennifer Collins. Cloudy, cooler, and breezy this afternoon with highs in the middle 70s and a northeast wind between 15 and 20 miles per hour. Expect a stray shower with a few lingering clouds tonight. Lows in the 60s by Sunday morning. Warmer Sunday with highs near 80 degrees and the chance for an isolated shower.
This report is sponsored by InvisibleFence.com. With over 3 million pets protected and a 99% success rate, Invisible Fence brand's training works, and customers agree. A recent reviewer said, "The training made me feel like they were training our dog versus just running the playbook." Learn how they can help protect your pet at InvisibleFence.com.
Hey, it's your boy Johnny C here, host of Florida Talk Real Estate. They're tops when it comes to helping people buy and sell houses. But Florida Talk Real Estate is so much more than that. For 5 years, I've watched these guys help thousands of our listeners with any real estate need. They couldn't do it without their sponsors, who are experts in their fields. Check it out. Jim DePola, powered by Keller Williams Realty. Their team specializes in helping people sell their house for top dollar, and buyers get great deals on the purchase of their home. That's what they did for me and my family, and I couldn't be happier that I hired them for my real estate transaction. Mike Rao from the mortgage firm is one of our favorite guests on the show, and he is the mortgage guy. Whether you're looking for a refi or a mortgage to purchase a new home, Mike Rao will get you the answers you need. The mortgage firm is licensed to do loans in Florida, Alabama, Tennessee, and Georgia, and they have local offices that cover all of South Florida. So if you're thinking about a refi or a new mortgage, go to the mortgage guy, Mike Rao, and find out what he can do for you. The Mortgage Firm, Inc., NMLS 189233, Florida license MLD 78, equal housing lender. The law office of Paul A. Krasker has been specializing in real estate law for nearly 25 years and has the professional team you need. Upside down with your house, Paul's team can help you conduct short sales, loan modifications, even if you're behind on payments. They also help you with foreclosure defense and bankruptcy. They can even help you get a student loan modification and repair your credit to get the score you need. Paul's full-service team has helped thousands of our listeners, and they can help you too. Trident Title LLC is the largest privately owned title company in Florida. When you need a title company to complete a refi, home purchase, or sale, Trident Title has got you covered. Not only do they offer competitive pricing, Trident Title has attorneys on staff to make sure if you have bumps in the road declaring title that you can get the job done. Beware, not all title companies in Florida have attorneys on staff. Trident Title does and complies with all the new federal regulations released last year. Ross Komarinetz, owner of Brightway Insurance, has been helping our listeners get great rates on homeowners insurance plans. Haven't checked your homeowners insurance policy in a while? This is a great way to help reduce your monthly mortgage payment. Ross can also help with renters and auto insurance. Ross is only a phone call away and can usually get the answers you need same day.
Call Ross today at 561-425-6228 or drop by his office at 873 Donald Ross Road in Juno Beach.
So now you know why I'm happy to be part of the Florida Talk Real Estate Show, the longest running real estate show in Florida. And all these sponsors are just a phone call or a click away. Just call 888-973-7828. That's 888-973-7828. Or go to floridatalkrealestate.com. That's floridatalkrealestate.com. And don't forget to use the most accurate search engine to find your new home or ask for a free home valuation because floridatalkrealestate.com has you covered. That's floridatalkrealestate.com.
This is Real Radio 92.1 and 101.7. Real talk for the Palm Beaches and the Treasure Coast. This is Florida Talk Real Estate with Jim DePola and Johnny C. Got a question for the show? Call us live at 1-877-927-6969.
I'll say it again, 877-927-6969. If you dial it, Jimothy's going to answer it. We'll line you up. Make the call. We'll take the call with your questions, comments, concerns in the world of real estate. Great to have you with us every Saturday. Florida Talk Real Estate here on Real Radio. I'm your boy, Johnny C. Jimothy is our producer extraordinaire. Hello, my friend.
Hello, and good morning.
And yes, that's that Jimothy, Penthouse Locker Room fame. He will be sticking around with Greek and Joe following the locker room as he does every Saturday. Ross Komarinetz is with us on this Saturday in studio with Brightway Insurance, Juno Beach. Ross, how are you?
I'm doing well. Happy South Florida.
Happy South Florida, still in Jimmy D's thunder. That's, of course, our fearless leader I'm referring to, Jim DePola. He runs a top-producing Keller Williams team. I've told you for over 11 years now. You find him at the Keller Williams Innovations there in Boynton Beach. Jimmy D, Jim DePola, how you be?
Happy South Florida, everybody.
That's what I'm talking
If you're going to do it right, Ross. Hope everybody's having a good day. It's a little cloudy out there today. I know my mom wants to go to Mardi Gras, and she wasn't sure if she's going to be able to make it because it looked like it might rain, but it says only 20% chance.
There's all kinds of stuff going on this week.
It is. It's really busy.
Yeah.
Italian Fest up here.
Yeah.
Oh,
the
the
Italian
the
Fest is
Jupiter Seafood Festival, I think, too.
Oh, wow.
It's coming up if it's
and
not
they're
this
doing
weekend.
some kind of marathon on A1A by Singer Island. They had all the cones out and everything. Something's going on over
probably.
there.
I think there's a race called Bridge the Gap.
That might be because it's going over the
Around
bridge
this
too.
time?
Yep.
Is
So
the Greek Fest this weekend too?
Yes.
Yeah.
Yep.
Oh my
There's
gosh.
a West Fest out at Collins Park in Royal Palm all weekend long. Yeah.
yeah, it's a lot of
There's
stuff
a lot
going on.
And I know there's more. Sorry if we left you out.
Martin County Fair.
Yeah.
Yeah.
Martin,
that's
Martin
north
County
still
Fair's-
happening?
and St. Lucy's next week.
Wow, I think it's so gone already. You know what I mean?
Mhm.
Yeah, right?
Yeah.
Fair season here in Florida.
Sure is.
Yeah. Well, let's get into insurance stuff. So I have a bunch of first time home buyers, and they're getting squeezed tremendously by rent, and the rent rates are going up so much. One of my first time home buyers, she was paying $2,000 a month for her place, and she had been there 4 years or something, and then the landlord called and said, "This year it's going to be $2,800." So, 800, at that point, she's like, yeah, exactly. So at that point, they're thinking, maybe it's time for me to buy, but they don't have a lot of money for the down payment. Most of them have good credit, according to Mike, like credit worthy to buy a house, to get a loan, but their purchase price is at a very low price point, maybe as low as $250. I have 4 people looking at $250 right now. In Palm Beach County, that's very, very difficult. I've been looking at under $300,000 homes now, really intensely for like a month.
And no willingness to kind of travel a little north?
Well, that's part of the thing is that if you there's one guy that I'm working with and his brother, and they're great people, but they really want to be in the Southwest Boca area. So they're looking at like manufactured homes and stuff. But if they would move like 15 miles north, they can get a really, really nice townhome. It won't be like super Mac Daddy upgraded, but it will be in very good condition, where you don't have to worry about a lot of things that like the deferred maintenance isn't that bad. And it will give them a really good start in order to get to the next level that they want to get to.
Right.
I had another couple that did that. They decided that they didn't want to buy a single family home at the time, and they bought a townhome. It was only like 3 years ago, and the townhome was grew in value so much that they went from barely getting into that townhome with barely enough money by the skin of their teeth with the down payment they needed and the closing costs to now, if they were to sell the unit, they'll make close to 6 figures in 3 years that
Awesome.
they can use to put for a down payment on a new home,
It's great.
for a larger home. So people forget that when you're a first-time home buyer, this isn't usually your forever home. This is your starting off point. You know that,
It's
Johnny,
like a springboard.
Right?
Yeah, Johnny's like almost ready to launch right now to do that springboard. And that's a very common experience. So when they sit down with me and they go, I want a single family home because I don't want an HOA, they get freaked out about those the homeowners association or the condo association monthly payments. And at their price point, the monthly payments could be for the HOA or condo fees could be anywhere in the low 100s all the way up to like $450 a month, right? And that's a lot, $450 a month. But then I started thinking about it, and I explained to one of my first-time homebuyers, said, if you would consider a townhome, a lot of the townhomes, the community is going to take care of your roof. They're going to take care of all the exterior of the building. And you're going to be saving that as compared to being a single family home buyer where you just have regular insurance and you have to cover everything. And then if your roof goes bad, you're going to have to pay for that new roof. If it's covered by the HOA, you don't really have to worry about that. That's their problem, right? And the guy was like, really? Like it never occurred to him that way. So I asked Ross, it was a really good exercise. Thank you, Ross, for doing this. I asked Ross, I just picked a townhome, any townhome, it didn't matter. And I picked the townhome, and Ross actually ran an insurance quote as if the exterior coverage was covered by the HOA and where exterior coverage is not covered. So Ross, can you explain the difference between, the HO, I think it's HO3 and HO6, and explain the difference between that and explain what it means about exterior coverage or not exterior coverage?
So the HO3 is for an owner-occupied single-family house where the owner lives there full-time, doesn't do any rent. So we're just talking about owner-occupied. For a single-family home, you as the homeowner are responsible for insuring the entire building. The roof, the walls, the interior, everything. That's all on you. On the HO6, that's a policy that assumes the association is going to cover the exterior.
Mm-hmm.
And you're only responsible for the interior and your contents. And so that's going to be a lot cheaper than it is for a policy where you're covering the whole building.
Yeah, and in this example that we used, I'm trying to pull it up now, Ross. I don't know if you memorize the numbers, but I remember with exterior coverage by the HOA, it was $2,900 a year.
Yeah, and these are what we call our premier quotes too. So if we do our budget quote, that goes down significantly. But yeah, for comparison reasons, we're at $2,900 for the policy that the HOA covers the exterior.
And if it didn't, I can't pull it up right now, but I know it started with the 4. I don't remember if it was 42 or just 4 flat.
I believe it was I think it was like 41, 42.
Yeah, so you're saving like more than $100 a month by having the HOA cover the building. You're saving $100 a month on your insurance right there, right? But if you were to buy a single family home and let's say it was a 1985 house, right? And let's just say that the roof's okay. We're not going to worry about useful life or anything, okay? But that it can get insured with Citizens. And it was a 2.2 or 2.5, 1,000 square feet to 1,200, 1,300 square feet. What do you think on average the homeowner's insurance? I know that contents matter and everything.
I mean, just using that townhouse example, it's $4,200.
Oh, it would be the same.
Yeah, I mean,
it wouldn't matter that it's a townhome because you're doing the exterior anyway. So
correct.
it's the same
Now,
as a single
the dwelling
family.
coverage might be a little bit cheaper on the townhouse because you're only really responsible for your part of the building, not the entire building. So you have shared walls and things like that. So the dwelling coverage might be a little bit cheaper, but the concept is the same.
Yeah. So the tip on that is to try to open up your horizon if you have a tough situation, to open up your horizon. A lot of times, maybe you should be looking at townhomes if you're on the super tight budget. Condos is a little tougher for first-time home buyers because if they don't have the proper, when the condo board sets their budget every year, if they set aside 10% of the collected income every month and it's actually in the budget where 10% of that money goes into a savings account for the community, then you can do FHA financing and 5% down financing. If not, you have to put at least 20% down and sometimes 25% down. And that usually blocks out a lot of first-time home buyers because they don't have 20%. For the down payment.
So it's easier to get into a well-run HOA.
It's much better to go to HOA than a condo unless you can find a condo that has that. And it isn't easily determined. There's a lot of effort to find out which condo. So, like, for example, those people I'm searching for right now, they might have 38 choices in there. But if you take out the condos, there's under 5.
Ooh.
So there's like 33 condos that would meet their budget. They could afford the condo fee, they could afford the price and everything, but the down payment is a deal breaker for them unless they have that. And the only way to find out, most agents don't check into it when they're taking the listing to find out if the condo board's taking that 10% and putting it aside. And it's in the budget. It has to be in the written budget, like the signed off budget, not that they're just doing it. And the other thing is that the listing agents a lot of times don't check into it. And trying to find it out when you're the buyer's agent is very difficult. So you call up the listing agent. I did this all day yesterday, right? You call up the listing agent. Hey, do you know if you qualify for the reserves? I don't know. Right. Well, can I get in touch with the property manager, the the condo board? And they usually don't have the information. And then we got to figure out how to make that happen. And that's what we're doing right now. We're trying to put a list together of all the FHA. Now that I'm doing this for so many people, and I can see this trend happening where tons of people are going to need this all the time.
Try to get ahead of it.
Yeah. So what I'm doing is anytime I see a condo that might work, I'm taking the effort to call. If it's a no, I kind of like making a little list right now. And there's too many condos to be an expert on it, but at least it gives me an idea of, so if somebody comes to me and goes, I need this or I need that we can go to it right away and figure it out. So you can save a lot of money. You can save a lot of money by having the exterior insurance. The other thing with the exterior insurance being covered by the HOA or the condo is that you don't have to worry about those big ticket items costs. Really, your biggest cost then becomes usually your AC. Right, because the roof is going to be taken care of by somebody. You don't have to worry about that anymore.
They're going to paint.
Yeah,
you don't have to worry about painting the place. You don't have to worry about lawn maintenance.
We had a person where down in Margate, I think it was Robin and Bruce's house, but I think it was Margate. But they had a condo. They didn't own it. It was an estate sale. When the landscapers outside were trimming the bushes, they knocked off one of the sprinkler heads. Well, nobody's lived in this house for a long time. So every time the sprinklers went on in the community in that zone, it splashed against the wall. And it kept splashing. It was a cinder block wall, but it kept splashing and splashing. And finally, it found a way to get into the wall itself. And then the inside of the house, there was moisture all around the window and the wall, right? And you could see that. And HOA, the condo took care of that one, right? Because it was covered by exterior, so it was taken care of by the condo, where normally it would be taken care of by the homeowner.
Yeah.
So there's all these little things.
And
now,
you have to file that claim as the homeowner. Now that claim's on your record, and now you're going to fight with the insurance company. It's like, no. I pay my HOA fee. You fix it.
I have a question about that. If somebody had a claim like on a roof or something, and it was like let's say it was 4 or 5 years ago, and the owners are selling the property, is that going to affect the new buyers if there was a claim on that house 4 or 5? I don't mean like a recent claim, like an Ian claim. It will that far back?
There are some companies that will not insure somebody who has had a claim in the last 5 years. Nor will they insure the home if the home has had a claim within the last 5 years.
Wow.
There are a couple companies like that.
Okay. So keep that in mind.
So it used to be that the claim followed the insured. So if you had a claim in New York a year ago and moved down here, that claim is still going to count against you, even though it was in another state on a home you don't own. Now, the claims are on the house. And they're saying, hey, no, this house had a claim 5 years ago. We're not going to take it.
Wow.
And 5 years is that threshold.
Wow. So if you have any kind of insurance questions, you know who to call.
Oh, I do.
Oh, yeah. You know who to call. You got to call Ross Komarinetz from Brightway Insurance, Juno Beach. The Juno Beach office, the only office, as far as we're concerned, that exists for insurance anywhere in the state. Yeah, you got it. You know it. So please give us a call. Ross is a great guy. He always tells you what's best for you, not what's best for him or his company, which means if he can't get you the quote that's better than the quote you have now, he's totally upfront and honest. I've seen it do it many, many times with customers. And when I say many, many times, most of the time he does have the best deal or a comparable deal, because in today's market, as Ross has told us before, almost everybody's going to Citizens. I almost said that different way. I came up with a new name for that company. I didn't even think about that.
Oh, that name is thrown around a lot.
I haven't ever heard. That just is a slip. I never even thought of that. So, but what we found out is that through talking to Ross over the last several months, almost everybody has to go to Citizens. So if you're going to somebody else and they're giving you a better quote than Ross for a Citizens policy, that means that they're not telling you something probably about the way they inputted the information to get the lowest quote for you. And you really need to know if you're comparing apples to apples.
Yeah.
So
I can't
if
tell
you
you
get
how many times I had that conversation. Like, you really got to make sure you're comparing apples to apples.
So please make sure that you call Ross. Even if you call Ross and you find out that the quote over there is lower, but it's the same company, something's different. I'm not saying it's wrong, just different. And Ross is going to tell you what the difference is, and then you can make an informed decision.
Yeah, and he might say, hey, stick with the company you have, but then just have them drop it to this level.
Yeah.
Because you're really kind of being fooled into thinking you have less coverage. That's why you have a lower payment.
Yes. So anytime you need insurance, you got to think of us. We just had a bunch of people call us this week for that. I think it's because we've been talking about insurance a lot. Gary just reached out to you recently, need an insurance policy. I was talking to somebody yesterday. 2 years ago, he got the insurance policy with you, re-upped with you a couple of times now. He was just a guy from the show. I didn't even know he had done it. Nancy took the call, sent it over to Ross. So smooth. I'm looking at the emails and I saw the quotes you gave him, right? And when I called him up to talk to him just yesterday, he was like, hey, 2 years ago, you went to Ross for insurance. He goes, oh, yeah, Ross is great. I'm still with him now, So all you got to do is call. It's so easy. You give us your address. We send it over to Ross. Ross does the calculations. If he doesn't have any questions, he sends you the premier quote. And what's the other?
A budget quote.
A budget quote. And just explain the difference between those two again.
Our premier quote is going to come with 50% of the dwelling amount for personal property.
Mm-hmm.
The personal property is going to be covered on a replacement cost basis, meaning that if you have damage to your stuff, you get to go to the store and buy new stuff. And then we also try and offer the lowest deductibles on that policy. And then we also send over our budget quote where we've reduced the personal property down to 25% of the dwelling coverage. We now have the personal property covered at actual cash value, which is depreciated. So basically, if you bought a TV 5 years ago, how much could you buy that TV for used? And then we increase the all other peril deductible a little bit and if possible, remove some of the endorsements that kind of enhance it, but aren't 100% necessary. And it's usually pretty significantly cheaper. And then we can go even cheaper than that if we need to.
Yep.
So
you got to give us a call. This is a big crisis in the state right now. Homeowners insurance, that's why we focus it on so much, because we care. We want to help people get the best deals they can get. That's what the one-stop real estate shop I created here at the Florida Talk Real Estate Show. And that's why I'm so glad to have Ross and Mike Ralph from the mortgage firm, Trident Title. I once said Ross Komarinetz from Brightway Insurance, Paola Krasker from the law office of Paola Krasker, which is always awesome. So check us out anytime you need anything. And of course, if you want to buy a house or sell a house or invest in a house, even commercial property, give me a call.
So we're going to dive into a break, I'm assuming?
Yes, we are.
All right, I have one quick question for Ross, and then we'll dive in. You mentioned the claims follow the home and or the policyholder, right? Do you get punished for switching companies too frequently?
No.
There's like no record of that, essentially, or if there is, it's not
the company that you're going to just cares that you've had insurance before.
Sure.
Because they don't want to say, hey, you haven't had insurance before. Wait, why do you want it now?
Why? What's going on now?
Yeah.
Right.
So that's the most important thing. You could switch companies every month.
What's the biggest gap you should have where, like, so obviously if somebody pays off their note, they own their home, and they're like, man, I'm going to go 6 months without paying for my insurance. Do you go 6 months? Are they going to question picking up new insurance?
So if you go more than 45 days, pretty much.
Yeah.
Yeah. So there are some companies that will go 90 days, but you have to get approval and have kind of specific reasons. But, we typically go off of about a 45 days because that's Citizens.
Okay.
That's their cutoff. So if you go more than 45 days without having prior insurance, now when you want to get insurance, if you called me today, I could bind you a policy today, but it's not going to take effect for 30 days.
Gotcha.
So they have a 30-day wait.
Even if you don't have a mortgage? So that's what I didn't understand. I thought that, like, if you didn't have a mortgage on the house, if you didn't have insurance for a while, and then you decide to get insurance, it's no big deal.
Well, I mean, it's not a big deal, but you're going to have to wait 30 days.
Huh.
Yeah,
before it becomes effective.
Because they want to make sure that you're not just getting the insurance because you need a claim right now, because you got a claim
your hot
right
water
now.
heater exploded yesterday.
Okay.
So 30 days doesn't feel long enough for me for that exact scenario. But are there more rigors to getting that binded as well? Like, is the process going to be harder, more stringent?
No,
stricter? No.
No,
It's just you're gonna have that 30-day gap.
Mm-hmm. Yeah.
In 30 days doesn't seem like
I
a
could
long
live.
time.
I could live without water for 30 days if my water heater explodes in my house.
My exact thinking. I think a few
I
months,
could tough it out.
few months more would be
Right, but
Ross
all that
Ross
water
went through
that's
it.
been sitting there
Yeah.
for 30 days is now growing mold, and then it kicks in.
True.
The insurance company is going to come in and do an inspection when you call that first day.
That's
and say, "I
my
had a
garden.
claim."
That's my indoor garden.
Yeah, they're going to say, "Well, that didn't happen yesterday. You didn't grow that mold yesterday."
I wanted that mold. That was my indoor garden.
Don't look at that. All right. Well, thank you for being very concise in your answers. And you get that. And the nice thing is there are times we ask questions on air, and the answer is, I don't know 100%, but they'll get the answer.
Get the answer.
Go to floridatalkrealestate.com. You can get to pros. These are experts in their field, and you get them all. That's why we call it the one-stop real estate shop. It's floridatalkrealestate.com. 4 minutes from now, we're back at it. Thanks for being with us every Saturday here on Real Radio.
We're everywhere you need to be.
I've been everywhere, man.
Tell your smart device to play Real Radio 92.1 on iHeartRadio.
Hey, it's your boy Johnny C here, host of Florida Talk Real Estate. They're tops when it comes to helping people buy and sell houses. But Florida Talk Real Estate is so much more than that. For 5 years, I've watched these guys help thousands of our listeners with any real estate need. They couldn't do it without their sponsors, who are experts in their fields. Check it out. Jim DePola, powered by Keller Williams Realty. Their team specializes in helping people sell their house for top dollar, and buyers get great deals on the purchase of their home. That's what they did for me and my family, and I couldn't be happier that I hired them for my real estate transaction. Mike Rao from the mortgage firm is one of our favorite guests on the show, and he is the mortgage guy. Whether you're looking for a refi or a mortgage to purchase a new home, Mike Rao will get you the answers you need. The mortgage firm is licensed to do loans in Florida, Alabama, Tennessee, and Georgia, and they have local offices that cover all of South Florida. So if you're thinking about a refi or a new mortgage, go to the mortgage guy, Mike Rao, and find out what he can do for you. The Mortgage Firm, Inc., NMLS 189233, Florida license MLD 78, equal housing lender. The law office of Paul A. Krasker has been specializing in real estate law for nearly 25 years and has the professional team you need. Upside down with your house, Paul's team can help you conduct short sales, loan modifications, even if you're behind on payments. They also help you with foreclosure defense and bankruptcy. They can even help you get a student loan modification and repair your credit to get the score you need. Paul's full-service team has helped thousands of our listeners, and they can help you too. Trident Title LLC is the largest privately owned title company in Florida. When you need a title company to complete a refi, home purchase, or sale, Trident Title has got you covered. Not only do they offer competitive pricing, Trident Title has attorneys on staff to make sure if you have bumps in the road declaring title that you can get the job done. Beware, not all title companies in Florida have attorneys on staff. Trident Title does and complies with all the new federal regulations released last year. Ross Komarinetz, owner of Brightway Insurance, has been helping our listeners get great rates on homeowners insurance plans. Haven't checked your homeowners insurance policy in a while? This is a great way to help reduce your monthly mortgage payment. Ross can also help with renters and auto insurance. Ross is only a phone call away and can usually get the answers you need same day.
Call Ross today at 561-425-6228 or drop by his office at 873
The
Donald
secret
Ross
about
Road.
our newest listing in Royal
Now you
Palm
know
Beach.
why I'm
La
happy to be
Mancha
part of the
is a
Florida
no
Talk Real
HOA
Estate
community
Show, the
with
longest
A-rated
running real
schools
estate
with
show in Florida. And all these sponsors are just a phone call or a click away. Just call 888-973-7828. That's 888-973-7828. Or go to floridatalkrealestate.com. That's floridatalkrealestate.com. And don't forget to use the most accurate search engine to find your new home or ask for a free home valuation because floridatalkrealestate.com has you covered. That's floridatalkrealestate.com.
The Anajar and Levine Accident Attorneys Studios.
Have you been in an accident? Call Anajar and Levine Accident Attorneys at 1-800-747-FREE.
That's 1-800-747-3733.
Real Radio 92.1 is WZZR West Palm Beach, an iHeartRadio station.
Download the free iHeartRadio app for all your music, radio, and podcasts. This is Florida Talk Real Estate with Jim DePola and Johnny C. Got a question for the show? Call us live at 1-877-927-6969.
Yeah, if you do have a question, comment, concern in the world of real estate, of course, if you want to jump into our conversation, dial it up, 877-927-6969. Jimothy will line you in there. We'll get you on the air. And, of course, if you're not comfortable on the radio, always remember Florida Talk Real Estate is .com, your one-stop real estate shop. That's access to the entire team at FloridaTalkRealEstate.com. Thanks for being with us on the old radio. Maybe you're streaming live with us on a Saturday on Facebook or YouTube, Florida Talk Real Estate on both. Thank you. Johnny C, that's me. Jimothy is our producer extraordinaire. Hello, my brother.
Good morning, gentlemen.
And good morning to Ross Komarinetz with Brightway Insurance, Juno Beach.
Juno, that's right, my man.
Good to have you with us always. And Jimmy D's here. That's our fearless leader. Told you for over 11 years, he runs the top producing Keller Williams team, the Florida Home Pros team. You'll find him at Keller Williams Innovations. Hello, my friend. What are you recording our whole conversation right now?
The series recording everything you're saying right now.
Recording my every word on his phone. That's awesome.
You can text that freezing in here.
I know it is.
Gosh.
Meat locker.
Yeah, I know, right? It's so freezing in here all the time. I have to remember to bring a jacket sometimes or something. I have to do that.
I wore shorts today like an idiot.
You've only been here 18 years, Johnny.
Jeez.
When I went to the Sun Sentinel, at least you have a good experience here. Hopefully have a good experience. When I went back to the Sun Sentinel, 15 years after I left there.
Yeah.
The person that used to be my editor she just retired, but she was the editor she moved all the way to editor-in-chief, basically, right? So I'm over there, and they asked me to do a podcast about the clown killer story. Remember the clown killer?
Sure.
I think you know that one.
Still going.
So this is like 2018 or anything. So they asked me to be part of a podcast. If you want to check out that podcast, go to the Sun Sentinel, go to Felonious, Florida, a podcast, and they'll have the clown killer, and I'm pretty profiled in that. And so the editor saw me. I haven't seen her in a long time. We didn't always get along when I was working for her. And we were talking, and I brought the old clown killer stories from, I think it was 1989 or something. I can't remember the year the clown killer happened, but I had all the articles, and I was comparing how big the newspaper was physically compared to today's newspaper. The newspapers back then were like 4 inches wider. So when you opened it up, it was like, you felt like you were almost holding a poster, right? And it was really long, right? It was really tall. And now they're like little tiny nothing papers, right? And so she says, where did you get those articles from? Because they were so old. I go, oh, I've kept every article I wrote for the Sun Sentinel, all 3,000 of them. And I have to give her credit because I still remember this like 5 years later. And she looked at me and she said, without missing a beat, she goes, too bad none of them are any good.
Oh. Wow.
Could you imagine? So that's my welcoming
Zinger.
back. That's I know, wasn't it? I was amazed, right? And I was like, yep, that's that person. I almost said her name. That's that person because we didn't get along when we were at the paper anyway. But that's my experience of going back to my place that I worked for 18 years, right? At least you come in here, everybody's like, oh, Johnny, how are you doing?
I got along with everybody.
Yes,
really,
you
there's
did.
only like 2 people I can think of that absolutely hated my guts, and I always had a force field between me and them. So, and I outlasted one of them. So,
I outlasted almost everybody over there. There were so many people that wanted me out of that paper, and I outlasted every single one. One actually tried to fire me one time in 2003, and I looked at her and I said, do you know how many, and that person was a managing editor. And I said, do you know how many people have tried to fire me before you? And they're all gone. And I'm still here. You're going to be gone before I go. She was gone before I went. So I was the crazy reporter that did all the crazy stuff, and people didn't like
Fletch.
how I got it.
Fletch.
I was total Fletch, right? I was total Fletch. I also called myself like the Mel Gibson character from Lethal Weapon. The crazy cop that does all the bad things and he like destroys everything in his wake, but he gets the bad guy. That was kind of like me. So they didn't want to deal with me all the time. It's kind of funny. So anyway, let's switch gears here. I want to talk about the economy because we've been talking about this. Remember, I've been talking that it's going to be very choppy waters for the foreseeable future. Well, we're getting into we've had a little bit of a smoother ride for a little bit, getting a little bit choppier again. So let's go over this. Interest rates. So we didn't even talk about interest rates last week because they haven't really been news, because the interest rates have been pretty flat for about 8 weeks now.
Yep.
Right. But not anymore. It went up 0.2 this month, 0.2%. So now we're at 6.32% now. So we're over 6.25. That's a 0.2% increase basically of where we were last week. The high for the year right now is the high for the high for the year is also the high since 2008. That's 7.08. So we're still about 3/4 of a point almost of the 7.08, but 6.32 is where we're at. We're starting to scoot up a little bit. The reason why this is so important, let me tell buyers and sellers this right now. You got to, if you're thinking about buying or you're thinking about selling anytime in the next 6 months to 1 year, you got to get prepared now, because we've already been through this. Johnny, do you remember? I'm looking at the chart right now. Do you remember when the interest rates, let's see, in March 22, the interest rates were like 3.7. So we had gone up almost more than a half a point from January, right? And we were telling everybody, this is a march northward.
Yep.
And if you don't do something about this, if you're buying, you're really going to lose a lot of your purchasing power, and it's really going to affect you in a lot of ways. So get prepared now, and don't have to buy anything you don't want to buy. Just be ready so that when something pops up, you can plunk down your contract and get your offer accepted. Because if you don't, you're going to go through a lot of pain. And we had a lot of people go through pain last year because, let's say in March at 3.7%, that's what I'm looking at in March of last year, we were at 3.7%. And then Mike would tell them, Mike Rao from the mortgage firm, we'd set the budget for them, because you got to know your numbers when you're a buyer. And Mike would set the budget and he would say, okay, you're good for $450,000. And then they don't find a house because the inventory was so low. And then they don't find the house, let's say, until June, which isn't that long when the inventory is so low. But now the interest rates are 5.7%
in 3 months.
So you just lost 22% of your purchase power, right? So 450 minus 20% is 90 grand. Take 90 grand off of 450 and you're at 360. Now you only could afford 360 at 5.7, right? So a lot of people are waiting. What I'm seeing a lot is I'm talking to a lot of people through our database, and a lot of people are waiting because they're confused. They have all these theories about what's going to happen in the future.
Oh boy.
But really, none of it's really based in reality. It's based on what their fears are, and and sometimes their political makeup. But also it's more about fear. And they don't really basing anything on facts. And we've got the facts. We've got all the statistics. We know what's happening in the market. We work with buyers. We work with sellers. We know what's happening in the market, and we can help you. So with the buyers, the tip is, with this topsy-turvy market, get approved for your mortgage now, because we're starting to go, it looks like we might start going through an upswing in the interest rates again, and we might be getting close to 7% again. And if you do, and we're at 6.32 now, like 3 weeks ago, we were at 6.08. So if we go to 7.08, you've lost 10% of your purchase power.
Yep.
Right? Because every point that it goes up, every interest point it goes up, you lose 11%, but I rounded off at 10% of your purchase power. So don't let that happen to you. Take control of your situation. Don't let the market take control of you. You take control of your life, and work the market the best you can, and not get beat up by the market, because you can. I saw all these people that were too slow to buy houses last year because they felt that the prices were just too high, right? But they were paying extremely low interest rates compared to today. And they weren't looking at the big picture. So please, if you're a buyer, now with the sellers, it's in the same thing. If you don't put the best time to put the house on the market throughout this market in the last year or so, we're talking over the last 12 months. Okay. I'm not going back a long time
and when
ago.
you're pulling those numbers up, the real kick in the pants for the people that waited with the lower interest rates is we saw appreciation in the homes still.
Yeah.
Not at the crazy town world, but at normal appreciation.
Yeah, we were getting normal appreciation.
They'd be equity positioned in a year.
Exactly.
Even though they felt like they paid too much for their home.
Exactly. Yeah. They still would have seen growth throughout the year. There are people that bought houses in 2019 with us and 2020 that we are in the process of selling right now, and they're getting more than 20% equity compared to way more in some cases, but 20% plus equity just for owning the house for 2 years and doing nothing then.
And they're looking to dive into a interest payment probably double what they got now. If not more.
They are, but there's a lot of ways to fight that as the seller when you're worried about what am I going to buy.
But it shows the willingness to, because of they pulled the trigger a couple of years ago, even though they were like, man, it might be a little hot and frothy. They did it, and they're still in a position to upgrade.
They're still in a better position. And so with the sellers, as the interest rates go up, right now, the amount of pending sales are so tied to the interest rates. It's crazy how closely aligned these are. There's no wiggle room. The interest rates start going up, and we've seen 2 weeks now of interest rates start to slightly go up, and now we have the 0.2. That's significant, almost a quarter point in a week. Okay, that's significant. If this trend continues, we're going to see the amount of pending sales crater again. January was great. December, I don't remember the exact numbers, but compared to December, January had 50% more pending sales in Palm Beach County.
So I think what you're saying is as the interest rates go up, there's less homes going under contract, less people making offers on homes. And as they go back down, you're starting to see more offers and
they
more
get
homes
back
going
into the
under
market
contract.
again. So you see these buyers sliding back. So you see the buyers sliding back and forth. Like a buyer might be sitting on the sidelines and waiting for interest rates to come down a little bit. When they get comfortable with that rate, they jump in. But if the rates start going up again and they haven't bought a house yet, they'll just sit on the sidelines and go, let's see what's going to happen. But I don't really have a problem with that necessarily, as long as that they're qualified for the loan right then, so that when it's time to go ahead and jump into the market or make that offer, that you've already done everything you need to do, because these interest rates can change so fast that if you haven't got the pre-approval, if you haven't turned in your tax returns and your pay stubs and found out your back end and front end debt to income ratio, and and your credit score, and figure out all of that, what type of loan you're going to get, do all that up front. You don't have to go out and buy right that second if you don't find what you're looking for, but be prepared and get ready so that you can cut that check or make that contract offer when the market is right for you. And this market's going to be very topsy-turvy. It's going to be very choppy waters coming ahead, which gets us back to the big macro economy, which I know Johnny loves talking about with me. Okay, wow, look at the reports that we just got the last couple of weeks. So I think it was 10 days ago, the Fed raised the Fed reserve rate by a quarter point. At the beginning of the year, this is what all the economists were thinking. And I shouldn't say all, but the great majority, right? They were thinking, wow, we're probably going to see 1 to 3 rate increases in 2023. And by the fall of this year, they're going to start, maybe even the summer, but by the fall of this year, they're definitely going to start bringing the Fed reserve rate back down again. That's what everybody was thinking. Right? Well, then we had these 2 reports come out last week or this week. I don't remember if it was this week or last week. The first one, unemployment, 3.4% unemployment. That's crazy town. 1969 was the last time we had that low of unemployment.
But I know they're throwing in claim numbers when they're releasing unemployment numbers now, and that's where you start going,
Right, because the claim numbers are under 200,000 now. For Johnny's right there, 200,000, only less than 200,000 claims for new claims for the last 8 weeks.
Right,
that's a trend.
That's a great number.
So, and our unemployment rate is as low as 1969. That's crazy town too. And think about this: the lowest unemployment rate we had during this generation, if you will, my generation, if you will, was Clinton, right? Clinton had under 4% unemployment rate, right? Then from Clinton all the way through Obama, nothing came close to that, right? But then Trump came in, and then we had the lowest unemployment rate at that point. And now this administration beat out Trump's, which was super low anyway, right? And this is not healthy unemployment. 3.4 is not a healthy number. A healthy number is 4%, 4.5% is a healthy. because it gives us some fluidity of that people can move from job to job. And it's making it very difficult right now for that. And then the other thing with the jobless claims, it's really showing that people aren't going, almost all those job claims I read in the New York Times in their report or CNBC, they're almost all new claims, you said, Johnny. So these are all the layoffs. So a lot of these are the tech layoffs.
Yeah.
They're happening all over the country. A lot of that's the techie people.
The number would be higher if people that quit their jobs could file.
Yeah.
But they can't.
Yeah. So we have that happening. So now the stock market, I was reading yesterday in the Wall Street Journal, the stock market people are starting to freak out. Now they're predicting 10% drop in stocks because our economy is too damn strong for inflation, because the last thing is inflation, and we're at 6.4% in inflation. Well, that's good because it's like pick your poison, right? So the good news is on that is that we used to be at 9.1% inflation last year. Now we're down to 6.4. So we have seen it drop very consistently over time, but not as fast as the Fed wants. And 6.4%, they're thinking is too darn high, right? So they're going to keep squeezing. They only got a sledgehammer, the Fed. They can't fine tune and tweak things because they don't want to be unfair. Even though I know this isn't their theory is, the Fed's theory is, we don't want to go into market by market and say, you know what, the used car market is too high, so we're going to affect only interest rates for used cars to slow down the used car market or something, right? They don't want to target things individually. So what they do is they just raise interest rates on everything, right? They try to squeeze people on your credit card, on your car, on your house, trying to get the public to slow down on the spending. But that's not happening. No. It's not happening right now. So the dichotomy we have in this market is there's definitely a disconnect between what the economy is and how people feel about the economy. Because when you do the surveys of how people feel about the economy, not so good, right? That's their attitude. But when you look at the numbers are too strong to curb inflation.
Well, I think if wherever people get their news or wherever they consume whatever, if there was rah about the economy, I think they'd feel that way.
Mm-hmm.
There's no rah about employment, it doesn't exist. You can't seek that out anywhere.
Mm-hmm.
So I think we just kind of herd mentality in a lot of ways, where if for somebody's not going, you should be excited, they're not going to get excited, because in real world, it's tough.
It really is. And that's another thing that I think, and
because we all, kind of overspend our means.
Not only that, but when you read the news, when you read all the news reports, how long have we been predicting that we're going to have a recession? It's been like 2 years since we've been talking about this recession that hasn't come yet.
Right.
So people have it in their head. When you read any news group, it doesn't matter if you're lefty, righty, blue,
pick
purple,
your source.
Pick your source. Everybody was talking. When's the recession coming? Oh, the recession's coming. And then it never appeared, and it still hasn't appeared now. Now some people are saying, there's people that some people are actually thinking we're going to have a soft landing again. They're back to that soft landing, right?
That's the
that's the
term of the week.
Yeah, for a while it went away. At first, everybody thought at the beginning of the year it would be a soft landing. Then everybody's like, "You're nuts." Beginning of last year,
not only improbable, probably impossible. You can't do it.
But you know what? Right now we haven't had that crash yet. We still haven't had that crash, even though the interest rates went from 3.11 in January 2022 to 6.32 today. We still haven't had that crash. Credit card debt went up. One of the good things that I read about in the paper, savings accounts are getting 4% interest now. A lot of savings accounts. So people are actually making money by leaving the money in the bank now instead of getting like 15 cents on your on your interest. So that's a little bit of a benefit. So
right in time for everybody to just burn through all their savings. Thanks.
Yeah.
I mean, like I said, credit card debt is getting up there for everybody.
Again.
I was reading the other day where I thought it was used cars, but it may have been just car loans in general, but I thought it was used car loans. They're starting to see an uptick in missed payments.
Oh yeah.
So, we could be headed for it. We could be down that road. I don't know.
We could be. And, the last payment that people stopped making when they can't afford to pay all their bills is their house.
Right.
So car would be before their house, but not before a lot of other things. Credit card debts would be before the car because you got to get in your car and drive around, right? So if you have to let go of your credit card debt, you do that, right? And or other things. Student loan debt would probably be the first thing people usually dump, right? Then it would probably be credit cards.
Speaking of which, call Paul.
Yep, call Paul.
Because
right?
he may not need to dump it. He may
I
just
know.
get
You
it.
don't even have to worry about that. And for most people, well, if you're not making your payments, you probably definitely don't need to worry about that, right? Because you probably have the student loan debt federal program is on your ability to pay. So if you can't make your student loan debt, you probably can get a waiver to pay it at all.
FloridaTalkRealEstate.com.
Yeah, do that. And so anyway, that's really so with this economy, you can't wait for the economy. You're never going to get a clear signal until it already happened behind. We already said that. You don't know what your peak is until the peak is behind you, right? That's just the way it is. So if you're predicting that you're going to pinpoint what's happening in this economy as a buyer or seller, you're probably not going to do that. What you need to do is know your numbers, know what the market's happening, know your numbers if you're going to sell, know your numbers if you're going to buy, get ready to do either. Make sure you're not being reactive to the market, but proactive to the market. And the way to do that is knowledge. We can give you that.
Beautiful. FloridaTalkRealEstate.com. The knowledge I love, Jim, is the knowledge of what money should I spend in my home for return on investment.
We're going to get that to, I want to do one more segment before we do that, just super quick. I wanted to go over one of our houses for sale. We almost went into contract this week, and it's a very good lesson for sellers to understand this and listing agents. Okay. We have a beautiful home in Royal Palm Beach. We had the open house last week with Paul Likens, and it's a 3-bedroom, 2-bath Royal Palm Beach home, CBS construction, pool home, corner lot, 565. That's right in the sweet spot of what all the other pool homes are selling in that area for square footage. This house is super nicely upgraded, and we got an offer this week that I've been negotiating for 5 days for the family. And the family really wanted this offer, but here's the problem. The person that's buying the house is self-employed, okay? Hasn't been down here. They're an out-of-country person. They haven't been here in the United States very long working. And they turned in a full asking price offer. And they didn't know what they were doing with their financing. So they were very excited to try to take this offer, right? The sellers. And I said, I really want to check out the financing first. So the first thing was, I don't want to say the bank, but it was a Canadian bank. Okay. And when I called up the mortgage company, I said to them, this person is self-employed. So what have you done to approve him for the loan? And he goes, well, we talked about his income and we discussed a couple of things.
So
well, that settles it.
Yeah. All right, good.
Man, I want to get a loan from this Canadian bank.
He said he made it up.
I know. And my head about exploded when I talked to that guy. He was very nice, but he just didn't seem to think there was a problem with him giving an approval. It was called an approval. He gave him a pre-approval letter, but he gave him a pre-approval letter where this is what I always talk about when I sit down at the listing. What you don't want is when the buyer comes and the buyer gives you the approval letter, and there's certain companies that are famous for this. They don't do much background checking, right? And they give you the letter anyway, and it's not worth the paper it's written on.
Yeah, it's got to be underwritten.
Yeah, you have to. So what I always ask the mortgage companies or mortgage officers when I have an approval letter for a buyer and I'm taking the listing, I say, have you checked their 2 years tax returns? Have you checked their pay stubs? Have you checked their bank statements? Have you done a front end and back end debt to income ratio? Have you checked the credit score? Have you actually gone into the court system? Make sure there's no foreclosure, bankruptcy, short sale, or repossession that might affect them qualifying for a loan. That's what I ask. Did you do that? This guy did nothing of that. Nothing. Okay. And he gave him approval. So I go, so let me ask you this. On a scale of 1 to 10, 1 means I have no idea if this guy can get a loan. And 10, this guy's getting a loan. Where is he on a scale of 1 to 10? And the guy goes, I'm not answering that question. I haven't gotten any paperwork. And then I said to him, but you gave him a letter. And you know what his answer to me was? It was a pre-approval letter, not an approval letter. What the use is the pre-approval letter?
There's no use.
And the buyer had no idea what's going on. They were totally clueless. So I'm trying to walk them through the whole thing, and it's just getting messier and messier. So we'll see how it works out. But the reason why I'm bringing that up is that two things. Number one, we're looking for a great buyer for the 565 house. We have a bunch of showings, so I know the buyer's coming without a doubt. But this is an awesome home. It's 297 Ponce de Leon in Royal Palm Beach. You can go check it out on our Facebook page because we did the open house last week. Really nice home. Has impact windows, fully upgraded in 2020. Everything on the house is awesome, and looking forward to get that one done. And I hope it's this buyer because the buyer really wants it, and I want them to buy the house, and the sellers would like to buy a house too. But we're not going to contract till we know what they're doing with their numbers.
Absolutely not.
We actually got them over to Mike, and Mike talked to them, so we know they're motivated, but we don't know what's going to happen with that yet. The other thing you need to know is if you're a listing agent and you're not checking this stuff out, you're not really doing a good job for your seller. And if you're a buyer's agent and you don't ask these questions to the loan officer if you don't know them, you're not doing a good job for your buyer because they're running around. And the scary part about this, if I didn't do that extra due diligence of digging deeper, instead of just going, oh, he has an approval letter, let's just go ahead forward. What would happen is we would have to put the house called active under contract, which is pending. And then we find out the deal doesn't work. And then we have to cancel it. And then that's a bad day.
Right.
Yeah.
Back on market, damaged goods.
Yep. Back on market. So you don't want to do back on market if you don't have to. So that's where we are with that. So I just wanted to go over a quick thing about that.
Yeah. And if you're thinking, man, I don't think I've worked with people that have done any of that. You can go to floridatalkrealestate.com. If you want to work with people that are really good at what they do, go to floridatalkrealestate.com, your one-stop real estate shop.
Thank you, Johnny. We're going to go ahead and do the upgrade. We're going to do the upgrade segment. I think we're going to hold the cheap homes out of state for next week. I think is what we're going to do because I want to go over this.
Yeah.
Yep.
Teased it.
Hold on.
Take it away.
One day I'm going to get through everything I say I'm going to talk about on the show, but it's not going to be today.
Here's a tip. Don't list so many things.
Yeah, I know. I know you always say that. I always like, it's funny in my regular job, I do under promise and overperform. On the show, I always over promise and underperform on the subject. So I have to get better at that.
Well, just take that time of telling you what's coming up to just get right into something that's coming up.
Yeah,
you know?
Exactly.
Yeah.
Okay, hold on here.
Well, we are going to talk about some ROI.
Yeah,
investing in your property correctly is important. You could just spend a ton of money and make everything new, but are you going to make that money back on the sale of your property? Though that is the old return on investment. That's what matters most. And I know Jim's pretty good at this, at leading people in the right direction.
Yeah,
understanding what, if you do this, we're going to get this much more for your home.
Oh, I'm sorry. We had Robin and Bruce call us just a few weeks ago. I think it was for our anniversary show where they were selling a house down in South Broward, and the house was an estate sale and had wallpaper everywhere. And poor Bruce, the owner of the property, he took some of it off. Oh my God, it's so hard to take that stuff off. It was like 1970s wallpaper, been there forever. And unfortunately, it wasn't even peeling off. It was just not in good shape. Yeah. So he took some of it off, and it was such a pain in the butt and so much effort. And he did a good job, right? He painted it, finished the walls, painted it. But there was like so much more wallpaper left in the house. And it was a real big debate. The carpeting was destroyed. Everything was original. What do you do with that house? And what I told him, we really might have to take this wallpaper out of here. But let's try not to, and let's put it on the market and see if we could just sell it without, because the inventory was so low at that point. There weren't a lot of choices for people, and it was a low price point condo. And we got it sold without him having to do anything. He was so happy. He was like, I don't have to do anything. I can get the house sold.
Well, getting it sold is one thing, but maximizing the proceeds is
well,
another.
He didn't get super low. What we decided was we put it on the market based on what we felt he should get in the condition it was. Because I didn't think he was going to get much more based on the effort, time, and cost of doing it, because he really, really didn't want to do that. And when we made a decision, if we didn't get a certain number without touching it, then he would go in and do the renovation.
There you go.
Right. So we wanted to test the market and see what the market said. And the market at that point was a good market for Bruce and Robin.
Excellent.
So
Did not have to do it.
Didn't have to do it. Thank God. And oh my God, it would have been so bad if they had to do that. I would have felt bad for Bruce. Okay. So NPR just came. I was listening to this yesterday when I was listening to NPR Marketplace. And they were reporting on a report that came out about how much money you get for return on upgrades of your house. Okay. And this is really important if you're selling. So I wanted to go over, I'm going to name, hold on here. I'm going to name, there it goes. I'm going to name repairs and you're going to tell me how much return on the house. So we're going to do it a percentage wise. So let's say that I do a kitchen renovation and the kitchen renovation cost me $30,000. And let's say that this study says they checked out 70,000 homes and analyzed 70,000 homes that did upgrades, right? 70,000 different types, all different types of upgrades. And then they analyzed it and what it sold for. Okay. So, and what the repairs cost. So let's say the kitchen was $30,000 repair. If their study determined that you got 30,000 back for the kitchen, that would be 100%, not 100% meaning you broke even. 100% is just break even. Anything under 100% percentage wise, you actually didn't make all the money that you spent on the renovation. Okay.
Fair enough.
So we're going to go through these and we're going to see what we got. Okay. So I'm going to ask you this. There were like, we're not going to go all of them, but there were like 20 different types of renovations they have in here. How many of them got more than 100%? Like, name a repair you think that you get more money back than what you put into it after you do the renovation.
Roof.
Yeah.
Oh, that's a good one. You guys stumped me on this. Wait, hold on. Oh, okay. Nope.
Huh.
71% for an asphalt shingle roof. Right? So if you put on a $15,000 roof, you're probably going to get 70% of that back for having the new roof.
Ross?
Not sure. Yeah.
What's my guess?
Yeah, got one?
I was trying to think of, because I don't think a lot of them would be where you would actually make more money from it. So
he's an insurance guy. He knows this.
No, I
New AC.
New AC? I don't think so.
No, I can't think, because I don't think a bathroom would. I don't think a kitchen would, because I don't know. I'll go floors.
What if you add a room? What if you add? Can we do that?
We have that. We have.
Can we do expansion?
Yeah, they have that in here.
I think that might be one that might get you something. I don't know.
Where is it?
Because typically market value is more than replacement cost.
Well,
so if it cost you X to add on or replace a section, typically market value is more than that. So addition. That's a good one.
Right?
Oh, even metal roof is only 70%. So asphalt and metal are the same in this study. Okay.
Oh.
I'm not saying I agree with this. I'm just telling you what they're telling you, because I'm going to tell you what I think is a listing agent and what really happens in real life. Okay. But they don't have a room addition, although they did talk about it in the article, but they don't have it in the stats. But they do have finished basement. So that's almost like, adding a room. 22.7%.
Oh.
That's it. So 75% of the money that you're spending is for personal use and enjoyment, and you'll get a 22% jump bump in your. So, I don't necessarily agree with that. By the way.
So according to NPR, there's nothing you can do to your home that's going to get.
There's only one
more than
thing,
100% return on your.
Nothing gets over 100. Nothing gets 100% or higher than 100%. But there's one thing that got 100%.
Plumbing?
Nope.
Paint?
Nope.
Red front door?
Nope. That's good. Yeah, right. That would be good, right? And red front door is good. Garage door replacement. It gets 100% return according to this study. right?
That doesn't make any sense.
I see. This is what I'm saying. I don't think these people were realtors that came up with this study. So let me just write out some of the
I think that might have
statistics
just been
because it's a little.
coincidence on.
Well, no, I read this all the time. This study. The reason why I brought it up, it isn't that I think the study's fugazi or anything. I've seen this before over and over again. So I felt it was worth talking about. So let me just read off a couple of things. Okay, the highest numbers: garage door replacement, 100%. Wood window replacement, right? 95%. Screened in porch addition. So that's kind of like what you were saying, 92%. Fiber cement siding replacement. So you got that T111 siding, you put the fiber cement siding on it, 92%. Okay. Now here are some of the lower ones you'd be surprised about. Kitchen countertops, 62%. Bathroom, an upscale bathroom addition, 64%. Attached garage addition, 60%.
Got impact windows on there anyway?
What about like paint? Because I would
They
imagine
don't have impact. They just said wood window replacement. That's it.
You know, rolling up on two different houses. You know, I don't know how much it costs to paint a house.
They
I don't
didn't
think
count-
it's terribly expensive.
When
but
Jimmy said it, I was like, gotta be. Nope.
Yeah, they didn't count it. They didn't count paint in here. I guess it's too small, I guess. But an upscale bathroom remodel, 50%, right? So these numbers are not really, people think, I just put a $50,000 kitchen in my house, so my house is worth $50,000 more than my neighbor who has the exact same house as me, but their kitchen's original. I put 50,000 in. It depends on the comps in the neighborhood. It isn't just that you put $50,000 in your house and your neighbor didn't put that new kitchen in, so yours is worth 50 more. It depends. Did you over improve? Maybe you put a $50,000 kitchen where a $25,000 kitchen is more apropos in that neighborhood, right? So you don't have the gold faucets, right? You don't have solid gold cut. Yeah, like
basically.
Johnny's
Yeah.
house.
You don't have to be
Hey,
like
don't
me.
go crazy. Yeah, you don't have to do it. You don't have to do that. So the thing is that what you got to know is if you've left the deferred maintenance for a really, really, really long time, and now you're selling your house, and now you want to do all this stuff that you didn't want to do when you owned the house the whole time you owned it, you're not necessarily going to get the money back. But what happens is people start panicking in their mind. It's like, oh my God, my carpeting is really, really old. How am I going to sell? How is anybody going to buy my house with the carpeting? Or my house needs a paint job, or the landscaping is a mess outside. Landscaping, painting. I really try to avoid people painting houses. I don't like asking them to paint, especially if the house is furnished. What a pain in the butt, right? You got to pull all the furniture in the middle of the room.
I was
put
more
tarps
thinking the
over 'em.
outside.
Yeah, the
you know?
outside. Well, curb appeal can help, but a lot of time it just depends how bad the paint job is and your curb appeal. If you had good curb appeal, and as long as you pressure wash it so you don't have cobwebs or mold or stuff growing on the walls or anything, you do that, and it's nicely landscaped, you might not have to do that. Upgrading a kitchen just to sell the house, unless you're an investor and buying it at a low price so that you're flipping it, not sure it's the best use of your time and money and stuff. So what we do is the same thing that we do with Robin. Now once in a while I'll ask them, you really need to paint this house, or you got to replace this carpeting so it smells like, dog. I remember I had this one house. Remember we talked about the cat that made the owner $200,000?
Yeah.
Well, I had another family, great family, but their dog probably cost them like $15,000 to $25,000. Why? The dog was 14 years old. God bless him. I love dogs. Okay. It was a 14-year-old dog. The carpeting had been there since the dog was a puppy. Okay. The carpeting was that old, and it smelt like the dog. And it was so bad that people were complaining. My open houses, people were complaining. They didn't want to stay in the house. It was too overwhelming. I had to have that conversation with the sellers and go, you really got to do something with this carpeting. They didn't believe me. They brought their best friend over to the house and said, does my house smell? And the best friend, thank God they were honest. They said, yeah, it smells. I think the dog's name was Ollie. It smells like Ollie. Right. And it was a vacant house by this point. Okay. So I wanted them to replace the carpeting. They didn't. They steam cleaned it. And it would have cost them about $3,200 to replace the carpeting. The place was empty. It would have just been bring a contractor in, put it out. Don't do anything else. House would have smelled fresh. and they probably would have made 15 to 25,000 more than they made, right? So these things really matter sometimes. So sometimes I will say, I would do this if I were you, especially if people start complaining about it. When everybody started complaining about the musty smell in the house, I had to say something at that point,
course.
right? So they did get it cleaned up good enough. We did sell it. We didn't sell it like some super low price by them not doing that, but they would have made more. They would have made more money putting the carpeting in. They would have made more than, let's say, it was $3,500. I know they would have made more than $3,500, even though that these reports are saying no. Right? Because people don't get psychologically what happens with the buyers. You got to think about the psychological
Well, and in that
aspect.
scenario, if it's just old carpeting, but there's not it's not odoriferous, right? Yeah, it's not that big of a deal. But where it's overwhelming to the point where you walk in and that carpeting is exactly what you remember because it's all you can think of is the smell. It's a huge effect.
Yeah.
So not all carpeting's gonna be.
Yeah, because then they think the house smells.
Right.
Not just the carpet.
Yeah,
Right.
they don't realize that if I just rip out this carpeting, everything's going to be okay. And the problem was, God bless that dog. The padding underneath was so full of crud, I'm sure.
14 years old.
14 years, right? Right. So full of crud that no matter what you did to the top part, the carpeting part, the underneath is going to be, you're not going to do anything about that. So it's really important that when you're thinking about selling your home, it's kind of too late most of the time, in most cases, to go, oh, I'm going to start ripping everything apart and fixing things that I've been dealing with for a long time. Now, if you have anything that's not functioning right, you have a leaky sink or, leaky sinks or faucets dripping or your electrical plugs, some of them aren't working, or your panel keeps shutting off the circuit breaker for some reason because you wired it wrong when you were doing a home improvement project. Those things you should fix. Cleaning up your landscaping, very easy to do. It's sweat equity if you're doing it yourself. If you bring in a landscaper, you come in, you tighten everything up so you have better curb appeal. All of that stuff is very minimal, and you might want to do that kind of stuff.
Sure.
But cleaning the house and staging it, even if it's dated, just super deep cleaning the house on every level, every cabinet, every crevice. You clean the whole thing. It makes such a huge impact, even though it's dated. If it's super, super clean and it's dated, you're still going to do pretty good in that neighborhood. You really will. But if you decide I'm done with this house and you just want to get rid of it and you're ready to get rid of it and you don't do some of this stuff, it can affect the value of the sale. But these big ticket items, you really got to think hard before you do it, because I've seen people go through this. It isn't just the cost. It's the time and aggravation.
Sure.
It's either they're planning on doing it, they really can't get it done. I'm meeting with a couple later. They had these grand plans. They're an older couple. They had grand plans of like sprucing. They have a huge house with a big backyard on a lake. It's gorgeous, but the backyard patio deck really needed to be resurfaced or painted. There's a lot of stuff in the backyard, even though it's a gorgeous home. And they had plans of doing all this stuff to it. I'm like, you know what? Just get all this stuff cleared out. Let's get a pressure washer in here, pressure wash it. The people are going to have to paint the deck when they buy the house, right? But we'll have it all prepped, ready to go, and that will take 4 days as opposed to 3 months. Well, I've been talking to that couple now for over a year, and now they have to sell it. God bless them. And they can't do any of the stuff that we recommended, right? So people have eyes bigger than their stomach of what they can tackle, or they end up hiring a contractor and they don't hire a good contractor, so they don't show up on time, or they're changing the price on them all the time and they're never getting the thing done. And now they're fighting with their contractor all the time, becomes another headache and aggravation. So the best way to deal with that, talk to listing agents that have done this over and over and over again.
Yeah.
And know what's going on. And, you're listening to one right now.
Yeah.
Excuse me.
Go to floridatalkrealestate.com and you can work with pros. Experience matters, and knowledge goes a long, long way as well. You get it all. Experience, knowledge, and these are pros that work cohesively together. I've seen it time and time again. It's just a phone call away to get the answers that they're all needing to make sure you're trying to get whatever you're trying to get done gets done right. FloridaTalkRealEstate.com, your one-stop real estate shop.
Okay, so we only have a few minutes. I think we're gonna get to all the subjects I promised on. Do you mind? I think we're gonna go do where are cheap places to live that's not in Florida, because none of these 10 places are in Florida.
So this is all based on the lowest amount of down payment required to get into a new home.
Yeah. Yes, exactly. So I'm going to read stats because it was a little complicated when I was looking at it. Hold on here. Let me see.
I have a page on Facebook that whatever pops up in my feed, and it's always like old homes that are usually kind of bigger and in small towns that are like super cheap. And they always look like so cool to, they're old, like 1908 homes and things like that. And they're not, and they're, $295, $250, and they're just really cool. Some are like on big pieces of property, but they're just in like the middle of nowhere.
Yeah, exactly. I know. I kind of dream about those homes too. Is like, maybe I should just buy like a second home sometime and like just have a place like that, just so I can go over there and just be left alone.
Yeah.
It's kind of cool. Okay. So we're going to go through the top 10 if we get through it. Number 10, Saginaw, Michigan. You ready to move to Saginaw?
Sure.
That's the 10th lowest for down payment. So the average down payment in Saginaw, Michigan for a single family home is 8.7%. The median home price is $160. Home ownership rate in Saginaw is 71%. And what you need for median monthly housing cost up there, this includes mortgage payments and like electricity and all that stuff. You only need about $1,100 a month for that.
Probably find a sweet militia to join too.
Yeah, exactly.
Nice.
Yeah. Exactly. I heard you could be a guard for the governor out there too, pretty cheap, right? You could guard the governor 24/7. Typical home size is about 6.5 rooms. I guess I'm not going to talk about that all the time. It gets confusing, right? Not bedrooms, just rooms.
Still,
yeah.
Median's 160,
and
you only need $1,100 a month.
$1,100. Yep. Medium home purchase price is $160. Overall cost of living in Saginaw, Michigan is 12.2% less expensive than the average for the country. Okay, so if you don't like Saginaw, maybe Johnstown, Pennsylvania will be good for you.
Nice.
Okay.
Is that a Steeler country or is that Eagle country?
I'm not
It
sure.
matters
It
to me.
doesn't show on the map. Yeah, it does.
It
Yeah,
matters to me.
exactly.
Could be Amish country.
Yeah.
Well, now you're talking.
Oh, yeah. So
Finally use those candles I've been sitting on forever.
average down payment is almost the same as Saginaw. It's 8.6%. Medium home price is lower than Saginaw, $145,000 versus $160,000. Home ownership rate almost 80%. Monthly housing cost $973. Are we almost done?
Steeler country.
Oh, there you go. Okay.
All right, I'd consider
And
it.
then overall cost of living. Wow, I can't believe it. Overall cost of living 15.7%. So Johnstown and Saginaw are two places you could move to, but I'm telling you, there's 8 other places, and some of them I think would be better to move to, in my opinion. And we'll talk about that next week.
All right.
Okay,
Ooh.
we'll roll into next week.
Promise?
Yeah. Well, we're going to try.
All right.
We'll probably do what we did this week. We'll start off with this next week,
Nice.
right? We'll leave the cliffhanger.
Oh, it's hanging. All right.
Yeah, something's hanging. Something's hanging.
It's great to have you with us. The locker room is not like staged over here, Jimothy. That means they're on the road today. Where are they? At the
Yes,
Greek
they are.
Festival?
The Greek Festival, yeah, St. Catherine's Church.
Oh, all right. Greek and Joe out there broadcasting.
Yep.
Very nice.
Tatiana's
One of
out
my
there with
favorite
them.
saints.
Opa, fantastic.
It's Oprah.
Oprah. That's
Yes,
right. I'm
Oprah.
sorry. I've always said that wrong. I've always said that wrong.
Yeah.
We do thank
And you get a gyro. And you get a gyro.
And
And
a
you get a
gyro for
gyro.
you.
Yes.
We thank you very much for being with us on a Saturday, Florida Talk Real Estate. Hopefully you are going to stick around in the locker room broadcasting from the Greek Festival. Remember, Florida Talk Real Estate is a .com, your one-stop real estate shop. You can find us on Facebook, YouTube as well. Lots of information to be shared and consumed on both. But always remember, the one-stop real estate shop, FloridaTalkRealEstate.com. You got the hotline there, 888-973-7828, 24 hours a day, 7 days a week, answered by a live body. And that's not no AI chatbot. That's an actual person speaking to you, believe it or not. I know that's rare these days, but you can do it. Or just fill out the contact sheet, FloridaTalkRealEstate.com. Ross Komarinetz, Brightway Insurance, Juno Beach. Have a great rest of your weekend.
Thank you. You too. Everybody enjoy your festivals,
Yes.
whichever one you choose to go to.
It's quite a festive type weekend. Jimmy D, Jim DePola, I hope you have a great weekend as well.
Happy South Florida, everybody.
That's what I'm talking about. Stick around. The locker room is next. We'll be back at it next Saturday. 2 hours of infotainment. Florida Talk Real Estate right here. It's Real Radio.